Check out this week's specials at Miles Franklin. You've got 2022 Silver Maple Leafs, only $3.40 over spot. You've got RMC Silver Antelope coins, only $3.99 over spot. Email info@milesfranklin.com or call 1-800-822-8080 and tell them Mario or Monaco64 referred you. Wednesday, March 1st, 2023, Monaco64, home of alternative economics and contrarian views. Today, we're going to look at the Bradbury pound and to look at whether a Bradbury pound would free us from the tentacles of the bankers. So, recently there's been some news about the Bank of England and the fact that UK taxpayers could face a 200 billion hit from losses on the QE program, which is basically what the Bank of England has been doing since, started doing in 2008, stopped recently. They've been creating reserves out of thin air to buy government bonds to keep interest rates low. And in 2008, it was done to save the banks. And of course, we've seen that the banks have made record profits recently in 2022. And it seems, of course, every time the bankers lose out, they get bailed out by us, the taxpayer. So they socialize losses with the Bank of England and the Treasury. They're all controlled by the bankers, of course, and they have been for a long time. And we're going to see that nothing was very much different during the Bradbury pound era, which we're going to come to in a minute. So yes, this is going to be the cost of QE. And some people might ask, well, the Bank of England is a public institution. It's not private anymore. It was nationalized in 1946. Well, that's just for show. This shows that the bankers still control the Bank of England. They might not own it, but they get they're going to benefit from this. And why is that? Well, because the commercial banks can only operate if the Bank of England is solvent. And if we, the people, are going to pay back 200 billion, how do we do that? Well, we're going to have to work hard, produce things, and that's going to be translated into the value of the currency, and that's how they keep us, their tentacles on us. So now we're going to look at the Bradbury pound and what the Bradbury pound was, and then I'm going to show you why I don't think the Bradbury pound is the solution, and then I'm going to tell you what I think the solution is, of course. So there's an article here from 2014, Bring Back the Bradbury Pound, and this from Concept magazine. So let's quickly go through this. It gives you an idea why the Bradbury pound came about. It says, as Britain headed into war in 1914, the British banks found themselves on the brink of collapse due to their corrupt exploitation of the fractional reserve system. Through fractional reserve, what they do is they lend out more than they have. So you put a pound and they'll lend like 6, 7, or 8 pounds on the back of your pound. Fractional reserve, of course, has been going on for a long time. It started out with the goldsmiths in London and other places. They realized that people who deposit their gold with them for safekeeping, they wouldn't all come at the same time to get their gold. So they could lend gold, and then they started writing promissory notes that were seen as good as gold, and it was abuse, and bank runs come from this fractional reserve system. But unfortunately, I would add, the problem could be solved if we didn't have a lender of last resort, as the monopoly central bank, Bank of England and others are supposed to do. On our backs, on the back of the taxpayer. That's the whole problem too. So let's continue. The threat of war caused the British public to start asking for their money back. And they don't mean banknotes. they mean what used to be money. So here I've got £1. That's a sovereign, and this is from 1908. So you could go with your £1 Bank of England note and get your money. That's what this article means. That's a shilling, which is 12 pence. There were 240 pence to the pound. So 20 shillings was basically a pound. That was the money. That's what this article means. And it's interesting that they never talk about that. They never say that money was gold and silver. So let's keep going. This caused serious problems for the banks and brought them to the brink of bankruptcy. War was declared on 28th July 1914, and the government gave the banks breathing space by offering capital control. This gave the banks the ability to refuse to pay out on withdrawals as and when they saw fit. The bank holiday a week later saw the government step in again by extending the holiday by 3 days, and urgent negotiations began. Lloyd George, the then Chancellor, did all he was asked of by the banks, pretty much what they did during the pandemic as well with these loans that the banks provided, but were guaranteed by the Treasury and ultimately us, so nothing's changed. Thus, when the banks reopened, customers wishing to make withdrawals were issued the newly legal tendered printed notes. Yes, promissory notes for real money. These notes were issued by the state and backed by nothing more than the credit of the state. These new notes were dubbed the Bradbury pound because they were signed by the then Secretary of State, John Bradbury. As soon as the banking crisis was over, Lloyd George again did as he was told and stopped issuing the notes. The banks pointed out that if the government continued to issue these interest-free notes, the bankers would not be able to make a healthy profit from the war. Despite Lloyd George's capitulation, precedents had been set in Britain which could be adopted today. So there you go. That's the story of the Bradbury pound. And my view is that the problem was not the gold standard or the silver coinage. The problem was that the government took us into a war. That was the problem. The problem is that we have a central bank, the Bank of England, that has a monopoly power to issue notes and a monopoly power to bail out the banks, the lender of last resort. Yes, and there are other articles and campaigns. For example, this is there's a campaign here you can sign. Bring back the Bradbury pound. They've got 327 out of 400 signatures, a petition. There's another article here that talks about Treasury Notes of England, a story of a savior. Is it really a savior? Well, it came because of a war. It was not something that was done to improve things. It was an emergency action by the Treasury. Am I saying that it was right for the bankers to make a profit out of war? No. I recommend you read a small book that I have here called War is a Racket by Smedley Butler. I'm totally against it. But I wanted to show you what happened during the war, after the war, and also previous to the war in terms of inflation. And I have to thank the Bank of England for this because they have a very good inflation calculator. I know they've tinkered. Well, it's the Office of National Statistics has tinkered with it recently, but be as it may, it will show you what I mean, why the Bradbury pound was not really a panacea. And one more question I have to ask you, and you have to think about it. This is just like a question. Would you really trust governments to be in charge of currency like that, being issuing currency out of thin air for their pet projects or for wars? I personally wouldn't. We've seen how corruption is endemic right now. And am I saying the bankers should be able to do it through their fiat currency? No, but we're going to come to my solution in a minute. And you probably already know my solution, of course. But just wanted to show you the period from 1914 to 1920. Why 1920? Well, because then you really had the effects of the whole inflationary period, not just of the Bradbury pound, but the fact that Britain suspended the gold standard and forced people to accept, legal tender notes, not just from the Treasury, but also from the Bank of England. And the Bradbury pound notes, they were not taken out of circulation until 1928. And according to some people, about 350 million pounds worth were issued. So, as you can see here, inflation from 1914 to 1920, or CPI, averaged 17.1% a year. So it doesn't seem like a very good performance there. And then I've got here inflation from 1900 to 1914. Well, that was 0.5 a year. So virtually no inflation, a little bit of inflation. And then if you go back further, 1875 to 1900, I just took those two dates. Well, we actually had negative inflation, minus 0.3. So you only needed £9.39 to buy, in 1900, to buy what you could in 1875 with £10. So the pound in your pocket was actually gaining value. Why was that, I think? Well, productivity, the Industrial Revolution, all the good things of when you have sound money. And then I've looked further as well. And 1920 to 1930, so that's period after the war, so to speak, up until 1930, which is an important date in terms of the economy, the Great Depression. But you can see that actually from that period, in that period we had minus 3.7% inflation a year. And you might ask, why is that? Well, because they were reining in back the inflation from the war. And I think that's what caused a lot of the problems, the strikes, the unemployment. It wasn't capitalism. It was all the fault of a war that, frankly, I don't think Britain should have gotten involved in. And I've also got, it shows you how from 1914 to 1930, they were able to bring down the inflation, but it was still 3.6%. So if the Bradbury pound is not the solution, if central banking and fiat currency is not the solution, it's very easy, if you know a little bit about what I've been talking about over the years. Well, the solution is to go back to sound money, gold and silver, and allow the public, the free market, to really decide what money is. And historically, it's been gold and silver. And what would be the purpose of government in a system like that? Well, government would have to make sure through their mints that the coins were good. And you could bring in jewelry, for example, gold or silver jewelry, and they would mint money for you for a small fee. That's called seigniorage. And you'd also have to abolish the Bank of England, because all the Bank of England does is make it possible for the bankers to do the kind of shenanigans they did. during World War One. The kind of shenanigans they've been doing since the pandemic, the kind of shenanigans they did that resulted in the '08 crisis and us having to bail them out. And I don't think a Bradbury pound would make any difference because, do you trust politicians? Do you trust bankers? No. And both alternatives, in my opinion, the Bradbury pound and what we have today, are bad alternatives. So to sum up, I think the only way we can be freer and more prosperous and live in a peaceful society is through sound money and small government, not of course through the Bradbury pound or what we have today. So with that, let's quickly look at where the markets are this morning. It's 8:22 a.m. London time. We've got spot gold trading at $18.3350. It's up just over $6. High's been 37, the low's been 18.22. Silver is back above 21. It's up 15 cents, 21.04. High's been 19, the low's been 20.81. What about the stock market? Well, the Dow futures up 90 points. NASDAQ 100 futures up 44. S&P is up 12 or 1/3% at 39.79. FTSE is up 0.5% at 79.20. To the currencies, well, we've got sterling at 120.79. That's up 0.5%. The euro is up 2/3% at 106.40. And the dollar is down 0.2 versus the yen at 135.97. Dollar is down almost 1% versus the yuan at 689.33. To the other currencies, we've got Aussie dollar up 0.5%, 67.64. The dollar's down 1/3 versus the loonie or Canadian dollar at 135.96, and the Kiwi dollar is up 1% at 62.40. To the general commodities, platinum is up $10, trading at $9.65. WTI crude is up 2/3% at 77.50. Brent crude is up 2/3 as well, just below 84. And high-grade copper is up 1.6% at 4.15. So we're seeing the dollar weaken, commodities rise significantly, and the commodity currencies like the Aussie dollar are up as well. Finish off, let's look at the bond market. So we've got the 10-year yield. Let's check where that is. Well, that's at 395. It's up just under 4 basis points. The UK gilts, the 2-year is up 6 basis points at 375. The 10-year is up 8 basis points at 390. And the 30-year is up 7 at 420. And in Japan, they're still being able to keep that JGB yield capped at 50 basis points for now. So with that, I'm going to wish you all a very good day. Take care. Bye.